Charts and options flowing high, stakes are rising, watch them fly. Natural gas, a wild ride, in the market we confide. Commodities, silver, gold, traders' dreams, tales we told. Futures contracts never fold, in profits we behold. Buy low, sell high, money stacks, touch the sky. Market waves, we glide, in trading we reside. Bulls and bears, we ride the tide. Candlesticks can't hide, gas and metal side by side, where fortunes often collide. Leverage margins, risky play, day and night, no delay. Dip and tick every day, watch the numbers sway and sway. Broker screens, they light the night, every tick a gamble right. In this game we found the light, trading life our appetite. Buy low, sell high, money stacks, touch the sky. Market waves, we glide, in trading we reside. Bulls and bears, we ride the tide. Candlesticks can't hide, gas and metal side by side, where fortunes often collide. Bulls and bears, we ride the tide. Candlesticks can't hide, gas and metal side by side, in trading we reside. Bulls and bears, we ride the tide. Candlesticks can't hide, gas and metal side by side, where fortunes often collide. Leverage margins, risky play, day and night, no delay. Dip and tick every day, watch the numbers sway and sway. Rubber screens, they light the night, every tick a gamble right. In this game we found the light, trading light our appetite. Charts and options flowing high, stakes are rising, watch them fly. Natural gas, a wild ride, in the market we confide. Commodities, silver, gold, traders' dreams, tales we told.
Good afternoon, everyone, and welcome to the show. Thank you for waiting while I played the tune, just to let everyone get into the room. It's Sunday night. It's Sunday Night Live. It's good to see everyone here. And I have a power failure here right now. I'm in complete darkness apart from my office, and it's also about 35 degrees centigrade. So it's incredibly hot and dark, but I think I've got enough lighting in here for you to see me. So that's all that really matters. And of course, once I get the charts up, you'll be able to see those because they're beamed from outer space, not from my office. So let's say hello to everyone. And we've got a minute or two before we start. I'm just letting everyone get settled in, let the algorithms identify that we're here. Yes, nice tune, Vishesh, the gas giant. Martin, that doesn't sound too good, mate. $84 average. Let's see what silver might do. Just reading through your comments. Done what? Not a fan. All right, no worries. That's not done what. That's someone else talking about the music. Good afternoon. Greetings from Ole from Germany. Nice to see you. And I do look a little younger. I think I've got some fancy editing tools on my software. Good day from South, Icy, South Carolina. You don't often hear those words in the same sentence. And of course, that's going to be interesting for natural gas and crude oil. Short. Yeah, still short on crude. We'll talk about all of this stuff in a little while. So 3 minutes before we start. So let's just hope that the power holds out and that we don't have any power failures and that I don't overblow from, get overheated and expire, wilt away on stream here. So we'll talk about crude oil. Welcome, Rob, from Cardiff. Wow, I don't think we've had anyone from Cardiff in Wales before. And good day, Amit. Nice to see you. All right, folks. So grab a coffee, as I always say, and settle down. Get your notebooks out. Make sure you're ready to take some notes. If you've got some levels that you're watching or levels that you're interested in discovering, make sure you've got your notebook. It's always good to have a notebook, no matter what you're doing. I try and at least carry my phone around me, and I make notes on my phone if I don't have a pen and paper. So make some notes is my advice. Yeah, cold weather. Too cold for natty bears. Seem like they're out of hibernation for the winter. Yeah, nat gas bears maybe in trouble. But we'll have a look at the charts. We're right down at the bottom on the new futures rollover. So, we might go a little lower. I don't think so, though. We'll have a look shortly. So now what I'm going to do today, folks, we've still got a couple of minutes. I'm going to read through these notes. I will put these notes up in the private group for those of you who are members of the private group. So I'm not going to spend a lot of time on these notes today, but you will be able to download this and read through it yourself. So do that, and I will put this up in the private group straight after this session, as I always do. And of course, if you're not a member of the private group, you should become one. And there are links below that you can click on and join up. If you don't want to do that, you can just join this channel for a couple of bucks and still get our weekly members videos every Wednesday. That's our live stream on Wednesdays, plus all the extra videos that members get and the early releases too. You can sign up for this, what I'm talking about now, on this channel for about $2 a month. There's a link below. Straight under the video, it says join or something like that. I can't remember. Good day, Keith. Nice to see you. All right. So, folks, we are a little bit early. I feel like I should start, but I'm going to just wait for that extra few seconds so that no one gets in here too late and misses out the intro and the beginning. So there you go. It's good to have everyone here. Just thank you. Thank you, Omkar. Thanks, mate. I've got a new T-shirt. I think that might be part of it as well. I've got a brand new T-shirt, which I'm sporting in red, which I like. James Clooney. I think it's just a T-shirt. It's definitely not me. All right. Now, there goes my bell for the gate alarm. All right, folks, I'm going to start right now. I think we've got a minute, a few seconds. So I'm going to get onto my notes and start reading through them right now. As I said, I'm just going to cover these very briefly. I'm going to leave this note set up in the private group. So go and check it out there, and you can read it there. Yeah, I also had a shave, Vishesh. Yes, I did have a shave. So I shaved, I changed my shirt, and I washed behind my ears, as my mother always told me how to do it. And I'm now ready for the show. So let's get going. The clock has rolled over. I'm going to have a sip of Red Bull, and we'll read through some of these notes and get straight into the charts. And today I'm going to focus on natural gas, silver, gold, and stocks. Natural gas, silver, gold, and stocks, and a little bit of crude oil and one or two other things. We will cover Forex as well, and I'll cover some of the other stuff, including a little bit of crypto. But let's just read through these notes. Let me have a quick sip of juice. All right. Seems to be good. All right. So Sunday, the market briefing, 25th of January. The macro regime. So let's talk about the macro idea here. This is just a forenote. Across that asset structure, the focus is on stocks, bonds, FX, commodities, and crypto. And the key themes are really, there's only one key theme at the moment. There are various surrounding themes, sub-themes if you wish, but the main key theme that everyone's talking about and that everyone's a bit concerned about is this idea of fiat devaluation. In other words, currencies giving way as we have to deal with incredible, enormous amounts of debt that the West cannot pay back, and therefore they have to deflate their currency, or deflate the currency, inflate risk assets and other assets, not just risk assets. So we're seeing a move from fiat currencies into stores of wealth where people will try and leave them there as fiat currencies start to devalue. And we see inflation coming under pressure again, and we see assets in general rallying. And that includes things like property, stocks, crypto, obviously gold and metals, so all the metals, not only the investment metals, but also metals that are involved in this new economy, particularly silver and copper and some gold, but just an inflation in metals, in property, in stocks, particular stocks, but a broad-based recovery in stocks actually. And we're seeing a flow of money out of the dollar, out of the euro, out of the pound, out of everything else into assets. And so we must focus on where we want to be going. I don't want to trade too much currencies. I think currencies are going to be fairly stagnant against each other. We're seeing a general macro theme of currencies devaluing against risk and other assets, but not so much against each other. And there's this idea that the US dollar is going to crash against other currencies. I don't see that. In fact, I think, if anything, the dollar is going to be stronger in the longer term than things like the euro, Canadian dollar, Australian dollar, New Zealand dollar, British pound. All of those currencies are struggling against the US dollar in general, and the dollar has been fairly well bid up. So when I say devaluation in currency, I don't mean the dollar against the euro, the pound, or CAD, or whatever, or the euro against the dollar and all the others, or whatever currency you're talking about. I'm talking about currencies buying less and less. In other words, inflation increasing and asset values increasing, but currency values in relation to those things dropping significantly. That's where we're going, and we have to be aware of that. And so it's not a good idea to, in general, keep your money in the bank. It's better to put your money into things that will at least keep up with inflation, as inflation is likely to increase as well, as we see in what I think will be an acceleration. We've seen it already. This is not, I'm preaching to the choir or the converted. We've seen gold and silver and stock markets all at all-time highs. And so that is representing, particularly silver, I mean, unbelievable. And that's representing the flow of money out of currencies per se, out of the bank, in other words, out of JP Morgan and Citibank into gold and silver and crypto. Not so much crypto. Hopefully that'll catch up. I think that's going to be the catch-up play. But out of the bank into property, gold, silver, cryptos, stocks, etc., and also out of other banks up until now, out of the Japanese banks into all of those things, because you could borrow at almost no interest rates. That's coming to a stop. And so we're seeing money flowing back the other way. And that's one of the threats that we're facing, is the reverse flow of particularly money back into Japan, into Japanese bank accounts. Right, so that's kind of the thing. And so I think we're going to see asset price staggering upwards under the burden of sort of not really unrealistic expectations, but expectations which just seem inherently or just appear to be too high, that our goals are too high. And so I think, and then there's also this idea of money flowing out of Japan, back into Japan rather. And there's also this idea of risk on valuations being way too high. But I think this is all just a general move, a bubble, if you wish, out of currencies and into assets. That's really what this is all about. And I talk a little bit about what the Federal Reserve's boxed in. What are they going to do to avoid inflation accelerating again, but at the same time to avoid a recession by keeping interest rates too high or too low, triggering inflation, or too high, triggering job cuts, which we're seeing already. And I think we're not seeing the correct job numbers. I think we're seeing sanitized job numbers. So the Fed's got to dance this dance between inflation, jobs, and the economy. And it's really, really difficult because there is actually no easy way out. And so it's going to be gradualism rather than conviction, trying to toe the line, dance the delicate dance, incrementally easing, but stress is rising. If it's rising, ease a little bit, but not too much. We don't want inflation out of control. Tolerance for inflation running modestly above target. So what happened to the 2% target? Now it's 2.5%, 2.3, 2.4, 2.7, 2.3, and there's no more talk of it being back to 2% apart from once a month or every couple of months when Jerome says it or repeats it once in one sentence during the Fed meeting oppressor after the interest rate announcements. That's the only time he really brings up the 2%, and only very fleetingly. So maybe that idea is no longer there. So yeah, that's it, folks. I'm going to I'll leave these notes up in the private group. You could read about AI, what stock areas or sectors are going to be interesting. Sectors like the financials, defense and aerospace, AI and computing. And so whenever I'm looking to invest in stocks, generally, these are the sort of sectors that I'm kind of looking at the moment. That might change in the future. So I'll talk a little bit about that. And then crypto, of course. I think crypto is going to be a catch-up play, but it may not be this year. I'm hoping it will be. And as we're talking, actually, I'm watching my Bitcoin chart plunging down below 88,000 again, down to 87.8. So looking weak all of a sudden again on Sunday night. Let's hope it is not October the 10th one more time when we saw that massive liquidation in crypto. So back to the notes. Bonds. Yeah, bonds. This is the other thing. So bonds and debt this is the big point of implosion, really. Bond yields are drifting higher, not dramatically, but it's because people do not trust the fact that these countries can pay back their debts, and we know that they can't. We know that they cannot pay back. The US is never going to pay back the $37 trillion that it owes. It's never going to happen. And so it's very difficult to sell the bonds, even when you increase the rates a bit. And we saw bond rates increasing actually fairly significantly on Friday. If you look at the 10-year yield, I think it spiked up by 0.2%, quite a long way. We'll have a look at that chart shortly. And then commodities. We must talk about metals and we must talk about energies. What's going to happen to metals and energies? Well, we've seen already what has happened, and there's a bid under gold and silver for all sorts of reasons, not just as investment hedges or inflation hedges, but also there's a great deal of use for all of the metals that we're talking about, including gold, excuse me, and silver and platinum and palladium and lithium and plutonium and uranium. These are all metals, and they're all in great demand for more or less the same reasons, actually. Industrial demand, war demand, WAR, and electricity, basically. Electricity and AI, all one story, and natural gas might be thrown into that story too. The natural gas, AI, electricity, the whole big story with AI farms and so on. And of course, Bitcoin farms and so on. So yeah, it's all tied up together and heading in a very dramatic direction, and that's upwards as all of these things escalate against the dollar, against the euro, against the pound, the CAD, the Aussie, etc. Right, and then silver. Now we're going to talk about silver in some detail. What sort of levels could we expect? We're almost at 105 now. We're at 103. I'm going to look at this chart very carefully with you. But if we get through 105 and hold above 105, Martin, this is for you. Think about hedging, mate, if you can. If we hold above 105, I think we're going to 120, and that might only just be the start. So I would not be shorting silver right now, and we're going to have a look at the chart. However, there might be an argument for, if you are going to short silver, we're more or less at the right place at the moment, around about 100, big round number. Gold is at about 5,000, big, not quite there yet, but almost, big number. So $5,000 on gold, $100 on silver. Maybe it's time for a breather and for these to step back a bit before the next assault on those big rounds again. I don't know. Let's have a look at the charts. We're right there now. We've pushed into it like a price magnet very dramatically and very fast. All right. So hello, everyone. I'm watching your comments in the chat as we go along, but I can't respond to them because I've got limited technology now because of the power failure. So I'm working with what I've got, but I can read your comments and I will try and get to the questions and so on towards the end. All right, so silver, there's just not enough silver to match the paper market demand. That's one thing. And then we'll also look at the COT reports. I've got them up here. I haven't got the silver COT report, but I've got the gold COT report. And I want to talk to you about the natural gas COT report and the gold COT report shortly. In fact, just when I finish these notes. So natural gas, we'll come back to that in a moment. I'm going to read through this set of notes with you, though, on natural gas. So let's just read this together. Natural gas remains one of the most technically honest markets. We know that. One tick in the weather and the market reacts quite brutally. The recent sell-off because of warm weather, unexpectedly so, reduced heating demand, rapid liquidation by leveraged participants. Of course, we saw the big move up and the big move down, basically destroying leveraged positions. We've got some Jen from the COT report. They'll give us some info on that shortly. And then, so demand destruction, not a long-term supply glut. And I do think that natural gas has got a natural bid under it too, much like gold and silver, I suppose, for not very dissimilar reasons. And so I think we're going to be trading in a higher range between 3 and 5, maybe slightly higher, maybe $6, maybe 7. Those would be extremes though, but generally between 3 and maybe below 3 down to 250, that would be an extreme. Generally between $3 and $5 to $5.50. We're around $5 now on the continuous. We've dropped back down towards $3 on the futures, which is fantastic news for those looking to get long on natural gas. We'll go straight to the charts in a minute. And then crypto, I'm not going to talk a lot about crypto today. I'll leave this for Crypto Paul in his video tomorrow and during the week, and the live stream that Crypto Paul will be holding next week too. And we'll also talk about this on Wednesday's live stream for members. So please make sure that you've joined this channel. There's a link below that says join. Simple, pretty self-explanatory. Right, so I'll talk about crypto a little bit as we go on towards the end. It's also interesting, I want to talk about tokenization of equities, and maybe today is not the time for that, but it's an interesting development, and there are already exchanges who are tokenizing equities, indices, and some stock names, and this will be very interesting. It will imply that we get 24/7 access to stocks. Brilliant, if you like that sort of thing. I was a big advocate of not having 24/7 trading on crypto, and it's not good for one's health or heart or life or love or anything like that, working 24/7. It also gives you fractional ownership at scale, which is fantastic, reduce settlement risk, and increase global liquidity and could also increase volatility, of course, as well. So interesting developments there. And I think that's all I want to talk about. I do want to go onto the COT report, though, and I'm switching straight into analysis of specific markets now, so pay attention. I'm switching to the COT report here on natural gas, and I must quickly look at my screen to make sure I'm not covering half of it with my face, which I am. Let's try and reduce size a little bit. That's too small, isn't it? Let's make me something. No, that's way too big. We don't want to see that. All right, let's just leave it there for the moment and have a look at the COT report. So let's go straight down here and see what's going on. Now, let's just first of all look at the average price. This is natural gas. You can see the average price currently. I'm not sure what we've got here. I think this is the prior contract. That's the March contract. Yeah, slightly higher, 3.6 compared to seasonal average of 3. So we are a little high. We could get back down to $3 and maybe even slightly low. There's a gap down below. We'll look at the charts in a minute. But let's look at the commemorative traders and what they're busy doing. Remember, this report's a week old already, data taken from the 20th of January. It's now the 25th, so it's 5 days old, beginning of last week. So a lot of the moves that took place during last week, all the way down, all the way, last week was down basically, prior week was up. So all the way up, then we got the COT report. That's this report you see today. And then all the way down, that's not reflected anywhere on this COT report. And of course, we've got the rollover. When I mean all the way down, I mean the rollover brought us right back down to the bottom. We'll look at that on the chart. But let's look at the commemorative traders. Commercials, long 600,000 contracts, short 422. So biased long, but look at the differential in that last week, adding 2,500 more long contracts and taking off 6,500 short contracts. The producers, 252 long and 234 short, more or less the same. Basically a hedge there, but taking a lot off the short side. Look at that big 8,000 taken off the short side and a tiny bit added to the long side. And then managed money, that sort of balanced that out. Of course, we don't know how this is positioned for this coming week after the big moves and big move up and then the futures rollover. Managed money, that might be people like you and me, these two bottom lines, the managed money and the other reportables, 193 long and 270 short. Right. So quite a thing, right? That was at the top. Remember, this is the last week. This is right at the top. Before, we'd rallied all the way up there. Then we had the rollover and the weekend gap down. And look where we were positioned. Mostly short, very largely short, but taking a lot of size off the short side, 38,000, and far less on the long side, only 10,000. So even though the short side is leaning towards the short side, a lot of it was taken off on that last adjustment of contracts. The swap dealers, heavily based to the long side. Those are the hedgers. Other reportables, mainly retail traders, 47 long, 164 short, right at the top there. And I guess they're probably still short, even though we've had this contract rollover, which we're going to look at. And then non-commercials, heavily short, but balancing slightly more, I suppose, to the long side. So, but this kind of doesn't mean a lot because we don't know what happened during this week. And we've had very dramatic moves on natural gas. So I think I'd like to go and look at the charts. But before I do that, and whilst we're on these COT reports, let me look at gold and see where we're trading, because we need to know, is gold going to carry on past 5,000, move up further? And do we need to get long? Do we need to get short? apart from looking at the charts, we can get some info from here. Commercials, 85,000 long, 375 short. Now, this was at the, again, a week old. So we saw quite a, let me quickly look. What did we do precisely last week? You won't be able to see my chart, but I will bring them up in a minute. So gold, the last 5 days, we've moved up from 4,600 up to 4,980. That's what's happened in 5 days. So $250, $280 up on gold. And going back to the COT report, let's just see what it looks like here. And you can see the commercials heavily short. It's kind of interesting, but adding more to the long side and taking quite a lot off the short side. So even though they're heavily short, they have balanced, at least at the beginning of last week, did balance to the long side. Producers, 18,000 long, 61,000 short. Once again, short, but having to scramble and adjust as we see all these short contracts being taken off as this market rallied over the last 5 days. And then managed money, people like you and me, maybe managed money, other reportables, you and me managed. I'm not managing money anymore, but I'm in that mindset. 164 long, 26, whoops, we've lost it. Where did it go? Oops, I think I lost my, there we go, doing weird things on Apple. So managed money, 163 is this gold, yeah, 163 long, only 26 short, but adding more to the long side, more than double what we added to the short side. And then the non-commercials on gold, very, very long. Swap dealers, very short. Those are the hedges, you'd expect that. And then other reportables, the retail traders largely, mostly long, 132 long, only 24 short, but adding quite a lot more to the short side. All of these reducing the long side significantly, all right? Last week, a week old. We don't know what it looks like today. So there could be some switching around in gold. I haven't got the COT report for silver up here. And on natural gas, it looks like people are adding to the long side, and therefore we should look at the long side ourselves. So having said all of that, I think that's all I've got to say. Just to say to the members, we've now moved in, for those who are members of the private group, we've now moved into our new Circle facility, our new Circle group, chat room, everything room. We can do videos in here. We can do live streams. We put all our charts, all our trades, everything's up in here. And we're moving over. 64 people have already moved in here, and the rest will be following this week. So just to remind you, if you are a member, and you'll probably watch this if you remember, please join me in Circle. We're no longer going to be on Slack, all right? Not on Slack from Monday, although we will duplicate the posts for a few days. But from Monday, we're moving over to Circle. It's a more secure, more awesome space, and we can do a lot more things in here to support the members. All right, that's all I wanted to say on that. And I'm now going to remove this from the screen, not that one, and let's get up the charts. And we'll go straight there. With a bit of luck. And the power seems to be holding out okay. All right, there we go. So we've got the charts up. Just bear with me. All right, perfect. All right. Let's start with silver, and then I'll move on to natural gas and oil. And we'll do silver and gold now. Then I'll talk about natural gas and oil, and then I'll talk about stocks, and then we'll finish off with Bitcoin and some of the commodities. I'm not going to take an awful long time today because I think I might just run out of electricity. I've got too many things running, and there are batteries starting to overheat. I need to get actually a fully batteried up and solared up system going. I don't have that just yet. This is silver. I'm going to switch this to the weekly chart. And as you will know, and let's zoom out a wee bit. As you will know, silver has gone parabolic, exponential, ballistic, crazy, and has rallied up on this weekly chart up into the Fibonacci cluster where we are meeting significant resistance. Let's zoom in a little bit. Now, this Fibonacci cluster, I've got two sets of Fibonacci studies on here. First one is from this move up, from this swing low, the most recent one, the lowest point where my cursor is, up to the top there, and then the swing back down to the bottom where we launched out from again, and that's for my first Fibonacci study basis. The next one is from this swing low over here, this little spike low, up to the top there, and then back down to where that previous one was started over there. The minor Fibonacci study, the more local one, is this one here with the small, the truncated lines. And the bigger study is the one with the longer lines, which extend slightly more to the left. Right, that's where they come from. Let's see where we've got to. Now, if you remember, I said we were going to probably try to get to into the 90s, 92, and then 102, and then we would be near the top of the Fibonacci cluster. We're at $103.27 right now here at TVC. I don't know why I've got the TVC chart, but I do. So we're at $103.27. Now, I'm zooming out a bit. The 4.764 fib, the green line, the highest fib in this fib cluster is at, let's have a look. Actually, there's a price on the left-hand side here. Hang on, where is it? It's very frustrating. Let's have a look like this. It's about 105. Let's just put the line on there. I think it's at 105. It's 105.61, okay? Just fractionally above where we're trading now at 103.27, up to 105.61. That is the last chance Fibonacci extension before we must resort to the much longer term Fibonacci study, which takes us to these much bigger fibs over here that I talked about earlier. For now, though, we're into this fib cluster, and we're going to be testing it this week, starting tonight. And I guess we'll move up to 105 tonight. There's no reason why not. We have a shaven weekly candle. It's incredibly bullish. In fact, it's the only shaven head candle in the last number of months, last number of weeks. Every time we've had a shaven head candle, we've moved up from it, as a shaven head candle normally would do. This is a shaven head weekly candle. The next move is likely to be a continuation and not a retracement. Let's go to the day chart and zoom in a little bit further. So there we are. There's Friday's candle. It's a big bullish, shaven bottom, shaven top, shaven bum, shaven head candle. Very, very bullish indeed. And it's almost certain to extend up to $105.60 something, 60. Let's call it 105.70 in a few hours' time when the market opens. And then we'll have decision time. I suspect we may do something like this. I'm going to put a blob around this thing here, like that, and show you what it looked like over there. Shaven head candle. All right, big surge up like we've had here, breaking out of a local range like we have done here too. Big shaven head candle, shaven head, shaven bum, shaven head, shaven bum. And the next candle moved up to the next Fibonacci resistance level, which is now at $105.70, just above us. That's what we did there, moved up to the next fib level, and then formed what could have been, and it wasn't ultimately, a reversal candle, a bearish engulfing candle, which really should have moved down, but it didn't. It kept on moving up. All right. That's just a technical candle pattern, which didn't work out. It doesn't always, they don't always work out. And so here we are. I expect that we'll move up into that $105.70 level in the coming hours. And then we'll reach the decision point, and the market will decide whether we're going to do something similar to that and come back down to the bottom of the expansion candle, or if we just carry on and move up. All right. Two possibilities if and when we get to $105.70. If we get to $105.70, we may not do that. We may blast right through it we may gap over it. We may not even get there. We may just reverse from where we are currently trading. But I expect we will get there. And when we do, it'll be decision time. If we do not reject there and we close above $105.70, well, then we have to consider that we're going to the next Fibonacci level. And it's formed by this larger study to the left, where we've got these Fibonaccis. We've gone through all of them so far, including the 1.618. So we've gone more than 100% extension. And above here, we've got the 2.618, a very, very important Fibonacci level. And it's above us at $120. It's actually at 119. It's actually exactly $120. I like that because not only do I like the fact that it's the one of the most important Fibonacci extensions, we have an incredibly powerful move up with a shaven head weekly candle, which means it'll probably go higher beyond $105.70, possibly. I'm not saying it will, but it might do. Looks like it wants to. and that will take us up to $120.50 at the second major Fibonacci extension of the major move in the center of this page. I don't know what is more likely. I don't have a short or a long position. I got a hedged, very tiny hedged position somewhere down there, I think, almost insignificant, almost nothing. But I would like to get into this market because it's moving, and we can only make money on markets that move. And because silver is so volatile, we need to be in the market and take advantage of these moves. When the market's very quiet and dull and docile, no one makes any money. And when it does this sort of thing, there is the opportunity. Most people lose money, but there is the opportunity to make money. Retail traders have all been shorting this and have all been wiped out one after another. One by one, retail traders are capitulating, dropping their shorts, not only retail traders, but hedge funds too. I had a glance at the COT report earlier in the week. I don't want to bring it up now. There's no time. But I did see that there's capitulation of short positions on silver, just like there has been on natural gas. And so, like I said, these two are not dissimilar in many ways in the way that they trade. And so, and including crypto, and some of the cryptos trade in a similar way. So, yeah, I think there's a chance we get to 120 and then decide. But we need to get into this market, and if it's going to be long up to 120, maybe I should be buying at this ridiculously high level. And I think I might buy at the open if we don't gap open, hope for a move up to 105, and then decide, try and move stops to break even or something like that, and then decide what to do thereafter. If it keeps on moving up, I could get out at break even or hedge the trade. For me, that would not be a bad idea to get short at 105.70, hedge it if we close above there, and then aim for 120 and rinse and repeat at 120. So that's something I'll consider. Those in the private group, keep tuned, because either I'm going to get long or I'm going to wait for 100 at 105.70, or I'm going to wait for 120 to get short. I don't know what. I don't know which. So that's silver. So I don't have a position on there apart from one very tiny hedge position, which I'm not going to adjust. It's down here somewhere. Obviously, it looked like we had a chance of reversing. It didn't reverse. It bounced out, tried to hold moved out, tried to hold the dip there really and break down through it. One big bearish candle in the middle there, for example, but just couldn't do it. And it's moved up quite significantly since then. So that was our first attempt. We'll wait for something similar for a second attempt. Now, gold is a different story. While silver has been exponentiating, it's a word, exponentiating, there it is there. Look at that exponential parabolic move up. Gold has been dribbling up in a channel, not very exciting at all. Not exponential, at least just not yet. And gold has now reached its 2.618% Fibonacci, the one that I talked about on silver, remember? I said silver, if we break up through here on silver, let me just remind you, we'll go up to the 2.618. That's this one over here. Let's go to the week chart. Just to remind you, silver could head up to its 2.618 there at $120, all right? And at the same time, gold has reached already its 2.618 here at just shy of $5,000. We've also got the channel top above us that might need to be reached. And I've entered a very tiny 10%, 1/10, 10% size position short here to add to my hedge positions from down here. These are all hedged. I have 3 short positions and a long equivalent and equal to the size of those shorts. I thought we had a chance of turning around here at the 1.618. We've now got to the 2.618. We haven't got to the channel top, so we might have to get to the channel top still. And of course, there are other fibs way above us that other people are already aiming for. Some people are calling for $6,000, $7,000, $10,000. Well, if you think it's going to get there in the next few weeks, you should be long. But if you think that we might try and get up to 6,290, which is a 3.618 fib, and then turn around, or maybe we'll dribble up in the channel, maybe we'll just turn around here, typical channel sort of behavior, and end up at the 3.618 over there. I thought it was a 2.618, 3.618, and then eventually move down from there, something like that. But we're trading in quite an orderly fashion on gold, and I'm not panicking about this like you might be if you're shorting silver. I don't think this is a particularly dangerous looking chart. It's not aggressive like silver is. It's not violent. It's strong, it's sturdy, it's steady, and it's moving up. And we're not long, which is a pity. We have been long. I've been long all the time since this breakout triangle up into this sort of zone, and we've now started to try and get a bit of a retrace on it. But we've taken loads of profits on the longs. Similarly on silver, I got long on silver at $27, all the way down here. This is a weekly chart, but all the way down here at these moving averages. And we've been long all the time on silver up until recently. And I'm now looking to get short, potentially. However, as I said to you, I might ride this up to 120 if I get the chance, and then decide what to do at 120. Right. If we don't, and this is for people like Martin and others who are short on silver, I understand. I know the mind of the retail trader very, very well, because I am one, and I have been for over 32 years. So I know what you are thinking when you're shorting silver, even though it's the wrong thing to do, probably. But let me try and give you some hope. This is an incredibly overbought move. I'm not even bringing up the stochastic or the RSI or the MACD or any of the other oscillators, because they'll all be off the charts. So what we can do, though, is look at the Fibonacci extensions and say, yeah, this could be somewhere where silver might be interested in turning around for a retracement, a mean reversion even, just down. Let's just try and get down to the 20 period moving average, which is miles down below us. The 50 is down here, and all the way down to the 200, which is still in the 20s, in the $20. These are going to accelerate rapidly as we tick along because of this large move. So yeah, so basically we might just turn around here at 105. So Martin, that's the key level, $105.70. And if we do not hold there and we move above it and close above that level, allow for a spike maybe, or a wick through it. But if we close above that level, we should be aiming up to $120 at least. And we'll then look at it again. I might even try and get long at 100 for 120. That could give us, risky, sure, but it could give us a 20% move further to where we are already trading at a ridiculously overbought level. So tricky trading, very, very tricky. And that's what I've got to say about that. Now, someone asked about crude oil and natural gas. So let's go on to natural gas and crude oil. And what I want to talk about is what's actually happened over the last contract. And it's really quite startling. What we saw was this massive move up in this contract, the previous contract, after a weekend rollover gap, by the way, moving up dramatically into this high level up here. And at the same time, we got rid of a rollover gap. And let's just have a look at the contingent. I'll come back to that in a minute. So we were actually pretty fortunate on both of these contracts. We got long, and we were held the long all the way there. We also got long on the dip down. We bounced out of it quite nicely. We got out of that trade, and I've now got long again now that my futures chart has rolled over. I want to go to the 4-hour chart and try and squirrel into this in a little bit more detail. So here's the last move up on that last contract, massive move, and created a cascade of stop outs and triggering short covering all the way up, dramatic squeeze, even leaving a weekend gap behind over here at these two order blocks. And then we moved up. So we managed to get most of that move. I started to try and buy these dips on the retrace, and you can see that, just go to the continuous, we started to buy some of these dips on the retrace. Oh yeah, that was at the beginning of the move. There's that weekend gap. So we're still right up the top here. This is what I wanted to point out to you. On the continuous here at Pepperstone, we're still trading at above $5, $5.20. Whereas on the futures that we've now rolled over, and I know it's complicated and it's difficult to understand if you're not au fait with trading natural gas in general, there are all sorts of prices, all sorts of instruments that you can trade, including leveraged instruments, including inverse instruments, cold and boil, and you can trade futures in a variety of places. You can trade the front month or the forward months. You can trade the continuous. You can trade the spot. You can trade ETFs. You can trade just about anything with natural gas. And so it's confusing. But I'm going to try and focus on the futures here, because we were trading the continuous last week in lieu of the rollover coming up, which has now come up. This is the rollover gap. And so Black Bull this is representing the Henry Hub price at the futures price at the Henry Hub, has rolled over from just shy of $4, shy of $5 really, $4.90, and we've rolled over all the way back down. We got basically opened up at $3.60-ish, and dipped down a little bit further, and at about $3.50, I can't remember the exact price. I'm going to look at it very closely now when I get back to the private group. We bought at the lowest possible price that I could get. I don't know exactly what price it was, but I think it was $3.48 or $3.47 or $3.51, but around about $3.50 or just below. And we're now trading at $3.63. So we've already got 15 cents on this trade, roughly, by buying the bottom there. Now, why do I think this is the bottom? First of all, I think that we're going to be trading in a $3 to $5 range in general, with extensions beyond that, maybe up to $6 or $7 or down to $2.50, maybe even $2 at a stretch, but generally between $3 and $5. We're pretty close to $3 now, but we have a weekend gap down below us at $3.31, and the bottom of that gap is at $3.11, so getting very close to the $3 level. And then just below there, at the bottom of this order block, and that tiny little double bottom, tiny little wicky 4-hour candles, is just at about $3.01. So that means we may have to get back down to $3. We may have to close, probably do have to close that weekend rollover gap. And if we get to $3, well, we may as well get a little bit below $3. Why not? Just to get a few people out of the market. So if we're going to go below this current price where we got in and attempt to close that gap down to $3, may as well get to $3. And if we're going to get to $3, we may as well stop a few traders out for good measure below $3 whilst we're there. And so we might get down to 280 at a stretch. I don't think that's the most likely scenario. And because I bought here, I think we might try and hold, and we might have to close that gap at a later stage. We're below all the moving averages. We're at the top of this order block. We're in the buying zone. I've gone long. I've got a 10% position. I'll add to that if we successfully move up. I'm cognizant and aware of the fact we may have to fill the gap, the weekend gap just below us. And I'm aware of the fact that $3 might just be too attractive at the bottom, right at the bottom down there. And if we have to really do a bit of damage, we might have to get just below $3, and maybe that swing low. We talked about these swing lows on our last Sunday Night Live, actually. These two swing lows are ever so tempting. That one down there is at 288, is it? And the one just below that at 278. So as I said, about $2.80 might just be, well, why the hell not? Whilst we're at $3, let's get rid of a few people who have their stops just below $3. So, but I don't know if that's going to happen, folks. I'm already long, which means I've put my money where my mouth is, and I've gone long at the current price, hoping that we'll fill this weekend gap a little bit later on. Not today, not tomorrow, at another point. And maybe, just maybe, we've got to eat our way into this rollover gap a little bit first. If we go to the day chart, this is quite startling and extraordinary price action. You won't see this very often. I've been trading gas for a long time, and that all the way up to the top, exceeding the top, closing the weekend rollover gap, and then collapsing all the way back to where we started within the same contract is unbelievable. So basically, the contract ended up where it started, exactly at the price where I've just got long in. I'm hoping for a rinse and repeat. So we got long there, we got profits on the way up, we got some profits on the way down, and let's try again. At the 200 period moving average on the day chart, yes, we've got a weekend gap below us that might need to be filled immediately. In the middle of that weekend gap, there's also a dearth of volume, which means that it might need to be tickled as well. I don't know. We got a twin peak point of control here, and we got long at the point of control. This is actually the point of control overall on this chart. It's fractionally bigger than the one below it, and we got long at the point of control. I'm hoping this move all the way back up to $5 and $5.50, and some think that we could move up to $6 or $7, given the current weather conditions that we've seen coming over the wires, so to speak. So maybe in a few hours' time, we'll gap up. And if we do, I'd like to see us gap up above some of the important levels that are difficult to get through without a gap. We talked about the gaps and how we often gap through areas that are tough. Now, look at the left-hand side here. We've got a little gap over there, and it also coincides with the 200 and the 50-day moving averages here, the purple and the red lines, and we're below the 100 as well whilst we're talking. So a little gap up, given these gappy contracts, the last two contracts full of gaps, given that, and given that gap on the left-hand side and where the 250 period are, I would not be surprised if we just sort of gapped up into that gap on the left and maybe even above the 200 period moving average at about $4, just above $4. And we're trading at 362 now, call it 365. So that would be a 35-cent gap up if we get that. I'm sorry about the fan noises, just turned off. That was the, sound like a gambler. I don't think I'm a gambler, mate. I'm definitely not a gambler. It might be because I'm speaking fast, but it's because I'm trying to get through things before the lights go out. I'm definitely not gambling. I've been doing this for a long time. Gamblers don't last. They don't last. I've been doing this for 32 years. Maybe I've just been lucky for 32 years. Lady luck. So that's natural gas, folks. I'll read some of the questions as we get to them. And then someone did ask specifically about WTI oil. I'm short on oil. Got short the last tranche of the 200 period moving average here. My general thought is, and I've spoken about this a lot in last streams, in last Sunday's stream and on Wednesday's stream, and the videos that are during last week. We've talked a lot about WTI oil. I'd encourage you to go back and watch some of those videos rather than sort of guessing or hoping for me to repeat it here. There's a lot of material on WTI and natural gas over the last couple of weeks, last week specifically. So we sold at the 200 period moving average. And my general feeling is that WTI will continue to move down slowly, gradually, messily, and sporadically. It's not going to be fast, and we're getting to cheaper levels now. It's more difficult for sellers to drive the price down, and more buying interest creeps in as we get to cheaper, more bargain basement type prices on oil. And so it's going to be more difficult. I think we've got a chance of getting to $50 and below 50 to 48 and possibly even below there into the 30s. I think that's the least likely scenario, but it's a possibility. We've seen it before plenty of times. But right now, and on Friday was a bullish day. Let's just quickly zoom in. This is the day chart, and that was Friday. A bit of a bullish day after a big reversal on Thursday, back down, a very pleasing day on Thursday, taking us below the 100 period and reversing Wednesday's candle entirely with an engulfing candle. But that was re-engulfed actually on Friday with a big bullish candle. We're stuck in betwixt and between. The 200 period is above us and the 100, 20, and 50 are below us. The trend line that we've broken out of is below us, and the horizontal, very important resistance line, and which coincides with the 200, is above us. So we're stuck in between significant resistance and significant support. And it's looking by Friday's price action like it wants to try and bounce out of here, hold this trend line, hold these moving averages, and actually perform a reversal. If that is the case and we close above, I think that swing high really, and the 200 period moving average here, I will hedge this position and wait to see what happens next. I still think that oil is not going to be tremendously bid up, and that if anything, it will slump down rather than move up. So I'm hoping for this red path to materialize at some point, and that would take us down, to around $50 and maybe just a little bit lower down to about 48. And then I think we could get a bit of a short squeeze out of there. So if that doesn't happen and we hold here, we break above the 200 and this flat black line and start moving up into this order block and start gaining ground above these areas here, I'll then consider that maybe we've entered a more range market for WTI and we're not going to be moving down, considering that we've also got, we're quite cheap and it's pretty difficult to get lower from here, although I think we might try. So a bit messy, a little bit messy. And of course, let's see what happens with natural gas. If we do see a big surge in natural gas, it's likely that oil, WTI, will move in the opposite direction too. And so it would be really good, actually, if we got a big surge in natural gas, which sets off a sell-off in WTI at the same time. Alternatively, this could go completely the opposite way. We could see natural gas slumping down further for a few days or weeks or months even, and WTI moving higher for the same period of time. Until we reach that situation, we have not yet, I'm going to remain short on oil and long on natural gas. I'm also long on lithium. I'm not long on lithium. I lie. I'm sorry. I was long on lithium. I took profit, unfortunately, on Friday. Not Friday, on Wednesday, after the gap up into the resistance level. And I thought, yeah, we're probably going to have to come back down. A lot of gaps down below here on lithium. We've been long for a long time on lithium, all the way from actually much below here in these order blocks. About 2 years ago, we started buying it, and we've been variously long. But we seem to take profits too early. We took that profit way too early because it bounced. It did move down, bounced up dramatically. We could have got out much higher, but it did pull back, gave us another chance to buy, and we're out now. I'm hoping it'll pull back again, maybe to the 50 period or the 100, so that we can get long on lithium again. I'm also long on uranium through the instrument URA. You can check that out. And there are my two positions, over there and over there. And as I always do every week, I'll show you where we could get to on uranium by looking at the long-term weekly chart. And a parabolic move down could be followed by a big, beautiful U-shape with expanding volatility as we bounce out. Technically, absolutely perfect. And we could then see, and it's already seeming to be on its way, a sudden dramatic carry-on continuation move up to around about $130. We're trading at 57 now. And once we get there, I think we're going to carry on. I don't think that's going to be the top. A lot of demand for uranium starting to creep in here and there in the Far East and in Europe. All right, let's go on to stocks. I think that's all I'm going to say there. And then I'm just going to quickly touch on NASDAQ and the S&P. I've got longs on various names, but I'm going to focus on the indices for this video. I see my battery light warning is starting to flicker, so we're going to have to recharge the batteries soon. So this is the NASDAQ. Basically, as I said in my videos and on X, and please go and check out my X channel, our X channel, our team X channel for ArcisFX. And I put a lot of these charts up when there are no videos around. We post up, both Crypto, Paul, and myself, post up on X throughout the day. So what doesn't make it to video will often make it onto X. Like this chart, for example, which I posted up on Thursday or Friday, and it's an ascending triangle. Well, it was on NASDAQ, but I just drew this blue line in, and if you instead of just making it an ascending triangle, if you make it into a symmetrical triangle, you can see we've actually, with 3 touches, we've actually already broken out. Even though we pull back in down to the triangle bottom, we broke out again on Friday, and it's holding up pretty well. Higher highs, higher lows, big reversal candle on Wednesday, out of support and breaking up through the 100 and the 50 period moving averages. I think it all looks quite good. It's this kind of 2 steps up, 1 step down, 2 steps up, 1 step down. NASDAQ's not doing nearly as well as some of the other stuff, including the S&P. NASDAQ has not reached its all-time high, which was set all the way back in October last year. Remember October with the crypto sell-off. And on the other hand, the S&P has made repeated new all-time highs since then. Where's October? There's the October sell-off. And the S&P has made once, twice, on 2 occasions, new all-time highs, whereas the NASDAQ has not. This one is pretty similar. Big reversal out of the 50 period moving average. We got long at the bottom on as low as possible, really. The lower that dropped, the more twitchy my hand got to buy some more. And eventually we got in, not quite the bottom, but very close to the bottom. We got in another position there, and that's moving up. Slight rejection here on Friday and Thursday with a very tiny, actually look at this on the 1 hour chart, you'll see a bit of a tweezer top, maybe not. No, just a double top there on the 1 hour. And but we have almost, I think we closed that gap. And so now that we've closed this gap on the S&P, let's hope that that's not all she wrote, and that we'll carry on and not just move down now that the gap's been closed. So that's the S&P. I'm long on NASDAQ, S&P, and a multitude of names now. And if you're in the private group, we all know what positions we're in, and some of them are on German 30, MSTR, Tesla, Coinbase, Nvidia, and then over here on this page, a couple of other names: Avgo, Palantir, we bought, Circle, and nothing on Google, Microsoft, TSM, or any of the others. Now, the other one that we're in, of course, and if you're following this one, this is at least some good news, big sell-off, and this is good news for currency traders who are shorting the dollar against the yen. Not such good news for crypto and stock market traders who might see a strengthening of the yen as a threat to equity and risk asset markets, because money flowing back into Japan means less cheap money available to buy stuff with cheap money. And so we're seeing the yen strengthening as the dollar yen moves down, only to the lower 200 Bollinger Band, but down through the 20 and the 50 at least. And a break of the 50-day is a pretty important deal. So that's moving down. Dixie's moving down, and moving down quite sharply. I'm actually long on the Dixie. I'm going to hedge this one and let this dollar yen short trade run instead of the Dixie. I'm not going to hold that one. So that's that. And then I did say I'd touch on Bitcoin, and it doesn't look great, folks. I have to be honest. I don't even, we're at the bottom of this potential bear flag and about to break through the bottom of this bear flag. It's a perfectly neat, technically sound, beautiful bear flag. Every touch is perfect, and we're busy touching now. We actually did touch the line and bounced out. And everyone thought we had a chance on Friday. There's Friday's candle, a spinning top doji candle, which started off really well. We got up through the 50, up through these resistance levels, and collapsed back down again. But if you glance at the volume chart down here at the bottom on Thursday, when was that? That was Friday. Yeah, Friday. If you glance at the volume chart down here at the bottom, there's almost no volume compared to, like, for example, that big bull run. Look at the massive volume on there. Friday's volume, a bit of an attempt to rally through the 50, collapse back down, almost no volume. So it doesn't look good. And we're trying that channel bottom again right now, or many will be calling it a bear flag, and many more will be calling it a bear flag if and when it breaks. Look at where this channel line is absolutely perfect, and it's a really important channel. And so, if we break down here, we're probably going down a lot lower on Bitcoin. And I'll be hedging merrily throughout the entire process, I suppose, exhaustedly hedging Bitcoin, which I never really want to be doing much of, but I've had to be hedging for about 6 months now on a regular basis, which is exhausting. All right, folks, that's it. I think I've covered as much as I can, really, and I'm going to go through some of the questions. It's we've actually gone quite long. The batteries lasted really well. Now, I don't know why you think I sound like a gambler, HB. I do take a small amount of offense to that, but I'm going to let you off and not say anything else about it. Lucky for 32 years. Yeah, it could just be lucky. Lucky. Oh, you weren't saying that to me. Thanks, mate. No worries. I thought you were being unfriendly, but you weren't. 70K. Yeah. I don't know. You're talking about, you're talking to Rob. Okay. All right, mate. All right. I got you. Rob, have you seen the weather though? And the lack of pull on the grid is fine to go long until 2 a.m. my time. We're going to have a look at the weather more closely, Rob. As soon as I'm finished here, we've got some weather experts in our private group, and they'll let us know what's going on. I don't know what it looks like at the moment, this minute, but we'll check shortly. You lost it 2 years ago. What was that, Rob? The fire that took out the large part of the grid. Yeah. All right. I think you're talking amongst yourselves there. You're all talking amongst yourselves. Talk to me, folks. A request to check on fibs on gas for those who don't see fibs as second nature. I think, I don't know what else you want me to do, Vishesh. Ask me in the private group, mate. I'll put that up in the private group when we get there. Okay, don't forget, I'll do that. I don't know what your question is. I'm trying to get through all of the questions before we've got to get out of here. 20K long on Kratos. I don't know what you guys are talking. You're having a private conversation. Long or short on gold or silver. How do you feel about base metals versus the miners? I'm not really a miner person, MT. I'm a maximalist on most things. So I trade Bitcoin instead of alts. I trade gold instead of miners. I trade silver instead of miners. I trade whatever I can that's closest to the source, to the original, to the stuff, to the ground that it comes out of is what I like to trade. So I don't know about gold miners. It's not something, I'm not skilled in assessing Bitcoin miners, gold miners, silver miners, oil miners, gas miners. I don't know anything about those industries at all. And if I were to take bets on miners in any sort of commodity, or I just wouldn't know what to look for. Just don't know. There are all sorts of things that you need to know about if you're trading miners. First of all, which ones to select, or unless you trade the indices. Oh, right, Rob. And HB, it's all relevant. All right, now I think you guys are having a lovely chat without me. You should go and get a room, guys. Roby, lovely to see you, mate. No problem. Let's forget it. It's no issue whatsoever. No problem at all. All right, I think that's everything, folks. I know I think I'm a fairly decent sort of bloke. Copper longs. Let's have a look at copper. Who was that? Who said that? KL rank. Let's have a look at copper. Yeah, I didn't talk about copper. Copper, I think generally copper is going to be doing okay. And it's encouraging from one perspective in that when copper's doing okay, you can expect that generally the rest of the markets will be okay too. But if we see stuff like this happen, this is the tariff sell-off on copper. We did really well on copper, actually. We don't really need to trade this much at all at the moment because we still glowing, basking in the profits. So we got all these tops and all these bottoms. You're not going to believe me if I tell you that, but I've literally got all of these tops and all of the bottoms. And now the last trade that we took was trying to sell it off again here because it's very expensive at $6, $6 now, very expensive. And we tried to sell it off at about $5.20. Got a double top there, beautiful. All look good for a sell-off. You can't fault that really. And potentially at that same line where we sold off twice before, thought we'd have a go again, but we bust up through. So very good for copper. And we had to hedge, of course, because it didn't move down, it moved up. So I've got two shorts and a long almost on top of each other. So no real floating loss, just a little bit. But I don't know which direction to go. Overall, I think that long is very risky, but also short is very risky. But if anything, I favor the short. We've got this channel that it's a beautiful channel. And we're at the top of the channel, and it's a commodity like every other commodity. Yes, it's been bid up because it's been in demand. Metals have got a bid up. It's gone along with the flow of metal mania. Gold, copper got caught up in it. But of course, there's demand for AI, electricity, and war. Don't forget about war. The army uses a lot of, not just the army, the Navy and the Air Force and Space Force, I guess, use a lot of copper. A lot of it goes around the outside of bullets. And shells and armory and weaponry. So yeah, I think we're going to have a lot of demand from the military, a lot of demand from AI, a lot of demand for electricity. We're going to use a lot more electricity, a lot more natural gas, a lot more alternative energy sources, and a lot more copper. A lot more. I think we're going to use 5 to 10 times or need 5 to 10 times more electricity in the future than we currently use or produce. And so copper's part of that story. But we are at the top of the channel. And, last time we got there, we sold off by about, I don't know, $1.50. Every time we've got to this channel top, we've sold off by $1.50 every single time. And we're there now. Are we going to sell off by $1.50 from $6 down to $4.50 into, back into this region, or maybe down to $5.20, back to that line? I don't know. But I think back to the black line would be a good start, down to $5.20. And, that would be a healthy move. We don't want to see copper getting unhealthy and overextended. So I'd say something like that would be quite good, quite pleasant. Maybe we just keep doing this sort of thing and move up. Or maybe we've got to test deeper and get back down to the bottom of the channel again, closer to, I suppose, by that time, about $4.50. That's $1.50 down. Like I said, every time we get to the top, we get down $1.50. $1.50 from here would take us down to the channel bottom down there, and then back up again, probably, unless there's a demand issue and copper doesn't get bid up for any reason, or there's less demand for electricity, weaponry, AI farms, computer chips, high tension electrical wire, all that sort of thing. If that all drops off and industry doesn't need as much copper anymore and this starts collapsing down, we'll see it before the stock markets move. Dr. Copper will give us the signal. But I think any move back down, $1.50 down on copper would just be a normal retracement. It would keep us rising in this very neat ascending channel. We've also got a red trend line coming up underneath here, which would also be a support zone. And it's the steeper trend line within the slightly shallower green channel. And that steeper trend line indicates a sense of acceleration. We didn't get to the channel bottom on these recent dips. We only got to the red line and again to the red line. And so we've got a new player in this channel, which is supporting it in the interim, in between the two channel lines. And that could do so at the same time. So maybe just a dip down to there, that would be good too. And that would be a full 61.8% Fibonacci retracement too. So that's the kind of thing on copper. I haven't taken any further positions here just yet. We did take one, which we got out of at break even because it didn't keep moving down. So we got short over there. It moved down a bit. I got out at break even over here, and it's no longer short. I don't have that position on anymore. But the moment we start getting another inkling that we could get this move starting off, bit of a retracement down to the red line or the channel bottom, then I will get short on copper and try and get short. And then once we get down to the hedge, I'll take my long side hedge off. I will take probably take the long side hedge off at the top here as well, take some profit on the longs that we've got on. And then once we get back down to the orange arrow where my hedge is, that'll be in profit too. So I think we could get to $5 or $4.50 on copper and then move up in this rather orderly sort of channel that I was talking about. That's it. And that's, folks, is everything. Palladium, I'm not going to talk about palladium today, just to say that it'll probably keep on moving up with the other metals. I don't trade platinum and palladium very much, occasionally, but I don't like the way they trade all that much. And Tesla MSTR. Tesla MSTR coin. Let's have a quick look while we're here. I'll give you another minute on Tesla MSTR and coin. Yeah, so Tesla, look, I'm a big Tesla bull. I think Tesla, once these, and I don't know what the timing of it, but once the Optimus robots start coming out, I think he's promised to make 1 million of these things in the next number of years in order to get his $1 trillion bonus. I don't know what the details are, but I think no one will remember that Tesla ever made motor cars sometime in the fairly near future. There will be Tesla cars, I'm sure, but no one will remember Tesla for cars. It'll be because of robots. And I think Tesla has got a big, long story ahead of it. And I'm in Tesla for the ride. Now, I've got longs on Tesla. You can see the green arrows where I've been buying. Bought at the bottom there, bought it at the last swing to the 100-period moving average. And we've also got positions over here. One quite high, one slightly lower. We've come back down to the 100, and we might need to, I think I've got enough size on here almost, maybe not quite enough just yet. Maybe I need to put a little bit more on. Let's see how we go over this week. And if we can hold these moving averages, the 20, the 50, the 100, and that swing low down here at about 380, call it 400. I think we'll hold the 420, the weed number. Remember the 420 with Elon smoking weed on the Joe Rogan show, talking about 420. Well, 420 often holds. Look at that last dip there. It's very, very weird, but 420 for Tesla is a key number. We bounced right out of there on Wednesday last week. We bounced out of there 100 times in previous weeks. We've traded around the 420 fairly often. So let's say 420 is the bottom. And if we get down below there, it's a nice piercing pattern reversal candle here as well. If we get down below, I'll probably hedge it, but or at least reduce size maybe, or something like that. But I'm pretty bullish on Tesla. And MSTR and Coinbase depend very much on Bitcoin. And I can't say I know what's going to happen here, to be honest. I'm long. There are my positions, and I don't know what's going to happen. I'm hoping that this is not a big bear flag and that MSTR will hold here. But the Bitcoin story isn't going well. MSTR story isn't going well. And if we look at Coinbase, the story is not going well either. And that's also dropped out of a very long, large channel and just not looking good. 200-period moving average, double bottom down below. I wouldn't be surprised if Coinbase moves all the way back down to $144. And we're trading at 220, 216 now. And so we have to move down to 144. We'll probably go lower if we get there. A spike low or something like that, maybe down to this trend line on Tesla. Of course, by then we'll have to be hedged. So I'm hoping that that won't happen and that we'll find support anytime soon. So down below that double bottom to this falling trend line and the lower 200-period Bollinger Band, maybe it's going to have to do something like that. I don't know, but I'm hoping not, and I'm hoping that we'll hold here and that it'll bounce out. We've got a gap that we've filled to the left-hand side here. I don't know if we've quite reached the bottom of that gap. We have not. So another few pennies or a dollar or two, and we'll have closed that gap on Coinbase. And the top of the bottom of the gap, the top of the bottom of the gap is at $214. And we're currently trading at 216, 217. So $3 down, we'll close this gap. And then with a bit of luck, we can get some more longs on Coinbase and bounce out of there. I don't have a very enormous position on Coinbase. I've got a larger position on Tesla. And MSTR, it's a Bitcoin company. If Bitcoin fails, MSTR is going to fail. When I say fails, I don't mean the project. I mean Bitcoin fails local support and we've got to move a bit lower, MSTR will do the same thing, I'm sure. Unless MSTR becomes a leading indicator for Bitcoin, which it was previous to MSTR's drop-off, in which case MSTR could actually launch out before Bitcoin does and show Bitcoin the way. It has done that and traded and behaved like that in the past. Whether it can do it at these low levels and with such negative, weak, and pathetic sentiment about Bitcoin, probably unlikely to be doing a lot of anything at all. So this is Bitcoin, and I'll finish off with this. Ethereum is coming down to support. If these don't bounce here, folks, XRP coming back down to a massive triangle support, the top of the triangle. If these don't bounce out of here today, tonight, tomorrow, we're in big trouble with Bitcoin, Ethereum, Solana, XRP, and I would say the alts, but the alts are almost at zero already. I'm exaggerating, but you know what I mean. So here's Bitcoin thrusting down towards that channel bottom, bear flag bottom, potential bear flag bottom, potential double bottom here. We've got a cluster of lows, but it just doesn't look, it just looks horrible, very, very horrible. And not only that, but we've also had a preceding waterfall pattern. This is a very classic waterfall pattern, which is a very bearish pattern in itself. We've seen the waterfall appearing on multiple instruments and multiple markets fairly recently. Folks, that's everything I've got to say today. I'm a little tired now, so I'm going to sign off. I hope you've enjoyed it. I hope you have a wonderful Sunday afternoon or evening, wherever you are in the world. And I hope you are safe. If you're short on silver or gold, please be very careful. And please ask me, message me, ask me in the private group. Let's try and sort it out. And if you're short and hoping that this is going to turn around any time soon and your account is in peril, I would suggest you do something about it immediately. Take action, try and preserve and protect your capital. Otherwise, you're going to lose it all. All right, so I hate having to say all of that, but there you go. Yes, I'm long strategy. Yeah, it doesn't look good, as I said, not good. Gas at 528. I'm not sure. I'm not sure what you're looking at there, Muan Man. Yeah, and we talked about the rest. All right, folks. Only tune in to see if you're long on natural gas. Thank you, Rob. Not that you wanted to listen to anything else I had to say. Sol, yeah, MD, Sol doesn't look good. Let's just have a quick look at Sol. Might as well mop up these questions while I'm here. Sol, just coming into support. Don't like it. Don't like any of it. I don't like any of the crypto at the moment. And I'm long on Bitcoin. I have most of my investment strategy is crypto related. Not all of it, but most of it, or not most of it even, a large portion of it. So I don't want these to be moving down. I'm a Bitcoin player. I'm a Bitcoin investor. I'm a Bitcoin trader. I traded on multiple platforms, cold wallets, soft wallets, hard wallets, gentle wallets, whatever wallet you want. I got it on brokerage accounts. I got it saved. I got it stored. I spend it on a daily basis. I buy groceries with it. So I don't like all of this moving down at all. I'm not worried about it in the project in the long term, but I think we may have to suffer a little bit further down. And I wouldn't be surprised if we got into the 60s, unfortunately. And I'll be long hedged by then, and try and get some money on the short side of those moves. So knee deep in Bitcoin. Yeah, me too, mate. Me too. 2025 was brutal. Yeah, it was brutal year for sure. I've been fortunate. I'm a very active and nimble hedger. So I've been very fortunate to protect all of my coin, as they call it, through hedging and through severe and unrestrained risk management on occasion, doing exactly what I didn't want to do. Taking massive shorts on Bitcoin to offset my longs as to hedge them. Didn't want to do that. I don't like selling Bitcoin. Don't like shorting it at all. I don't like trading it, actually. I want to invest in it, not trade it. I don't mind trading all the other stuff. I don't want to trade my Bitcoin. All right, folks, have a great evening. And I'll see you live next week. There's something I've got to read to you. I'm going to do it. I won't forget, Paul. And it's written here because we now have a team. And I've got to sometimes do what I'm told to do. So here we go. I'm going to read it out to you. And just a reminder, I'll be back tomorrow to check in on natural gas. So we'll be doing a natural gas video tomorrow. Make sure to subscribe and come check that out. And Crypto Paul will be back on Tuesday with his usual weekly deep dive into Bitcoin. So make sure that you're subscribed so you do not miss out. And of course, for the very best altcoin action, don't forget to check out Altcoin Gems from Friday, as Paul has a really exciting long-term hodl setup that you don't want to miss. There you go. So that's what's coming up this week. Make sure to subscribe, tune in. As they said in the 60s, tune in and drop out. And I'll see you in the next session to come. Take care, everyone. Have a great evening. Speak to you soon.